One of the most frequent questions that we get asked here at True North is required mandatory distributions, otherwise known as RMD. What do I need to do with my distribution? When do I need to start? Who's calculating that for me? My name's Micciche. I'm the CEO of True North Retirement Advisors, where we specialize in retirement planning for business owners. RMD rules are complex and really not that intuitive. In fact, they're kind of like the rules of golf. Okay, if you play golf, you know that there's a lot of weird exceptions to certain rules, and you know, it doesn't make any sense at all. Actually, my personal favorite golf rule is the one about when you can't and can clean your golf ball. If you play golf, you know exactly what I'm talking about. Yes, I own a decisions book on the rules of golf. It's actually pretty interesting. And just so no one would steal it, or in case it got lost, I put my name in there. Yeah. So don't take my decisions book. There are 5 common mistakes that I see all the time, and it's simply because of those RMD rules. They're complex. And people don't really understand. It's like, okay, here's the rule, but then how do I apply that rule to my unique situation? Mistake number 1 is not realizing that there are actually different rules for 401k account RMDs, IRA account RMDs, and Roth account RMDs. Now, a lot of people out there are probably aware that if you have a Roth IRA, you don't have to take minimum distributions. That's one of the beauties of that account. But did you know that if you maintain a Roth 401k when you're 70 and a half and you have to start taking withdrawals, you do have to take withdrawals from that account? Makes perfect sense, right? Yeah. According to the IRS, you generally have to start taking mandatory withdrawals from your IRA, SEP IRA, simple IRA, or retirement plan account when you reach 70 and a half. Roth IRAs do not require withdrawals until after the death of the owner. Now, the operative word here, if you notice, it was generally we require this, because there are exceptions and the rules actually differ. So if you are still working and you've reached 70 and a half, you need to take a mandatory distribution from any IRA, traditional IRA accounts that you have. Okay, this doesn't apply to Roth, but it's the traditional IRA account. If you are still working and you are in a, let's say you have a 401k plan at your work and you are not a 5% or more owner, if you do not own more than 5% of the company, you can actually, you don't have to take required minimum distributions. Mistake number 2 is waiting to take your first mandatory distribution. There is this little weird quirk about the rule where if you don't want to take your RMD in that first year, you can actually push it out until year 2, and where you would take 2 required mandatory withdrawals, one for the year you turn 70 and a half, and then the other for the next year. Now, a lot of people like to wait, and they actually will do this. They'll wait until year 2, take both RMDs in that year. Here's the problem with that. You might be faced with a lot of potential tax consequences because you waited. So every dollar that you withdraw from your traditional IRA or 401k account is going to be included in your income for the year. And when you're inflating your income in the second year because you're having to take out 2 RMDs, you want to be really careful about that and not accidentally like bump you up into a whole new tax bracket. It could affect how your Social Security is taxed. It could affect all credits, tax credits. So the key here is to realize that every dollar you take out of your IRA has potential ramifications for both your income and your tax situation. RMD mistake number 3 is not using your mandatory distributions for your charitable contributions. So I was talking to a client the other day, and we were strategizing about what he was going to do with his required minimum distribution for this year. Like a lot of our clients, he doesn't need his mandatory withdrawal, his required minimum distribution, RMD. He doesn't need that for income. He has other sources of income. He takes some income out of his taxable accounts. And what he would prefer to do is just take it out of the IRA account and reinvest it into his joint account that he has with his spouse. And I was asking, I said, Larry, do you make charitable contributions? And we were talking about, what he contributes and how much. And I said, Larry, did you know you can actually take your mandatory distributions, make a contribution directly to the charities and causes that you care about, and every dollar, when it comes straight from your IRA to the charity, it doesn't get included in your income. You don't pay taxes on it. It doesn't impact your tax situation. It is a beautiful strategy. Okay, RMD mistake number 4 is taking and calculating your mandatory distribution from different accounts. This absolutely drives me up the wall. Clients do it all the time. Let's say you have like 3 old 401ks, 4 traditional IRAs, an old Roth 401k, a SEP IRA over here, and like some sort of weird annuity or something, that all at different financial institutions. All of those accounts are going to calculate and require different distributions from each one. Now, if this is you, it'd be very wise to simplify your life and consolidate those accounts. Let's say the total mandatory distribution that you need to take out that year is $25,000. You can take that $25,000 and you can take it out of each of the accounts that requires the mandatory distribution. Or you can say, well, I have this like stock portfolio over here and I don't want to sell those stocks. I want to keep that invested, and I have some cash over here and maybe some bonds, and I want to take it from that. You can pick and choose where you take your mandatory distribution from when the accounts are consolidated and when they're in IRA accounts. RMD mistake number 5 is not understanding that there are different rules for business owners. We work with a lot of business owners who continue to work past the age of 70 and a half, where they have to start taking withdrawals. And the rules are much more nuanced and actually difficult to understand. But what I do want to emphasize here is that just because you're taking required minimum distributions and you have to take that money out of your 401k and IRA account, it doesn't prevent you from continuing to make contributions to your 401k account. So for example, let's say that you're maxing out your 401k in 2018. That's $24,500 that you could contribute from your own paycheck into your 401k account. On top of that, depending on how your plan is structured, you'll also probably get some matching dollars and profit sharing contributions. So you could get north of like $50,000 that you can put into your 401k plan in your business while you're still working past the age of 70 and a half. Okay, that's fantastic. So talk to your tax advisor, understand how those unique rules apply to you. We know that the RMD rules are just a teeny tiny bit complex. So if you want answers about how the rules apply to your situation specifically, your unique situation, schedule a free RMD clarity call. If you click the link below this video, you can schedule your free RMD clarity call where we will discuss your individual situations and ask you a couple of key questions that will help us pinpoint what might be a good strategy for you. And then you can be off on your merry way. There's no pressure, no obligation, and pinky swear promise, no sales pitch. Okay, just valuable insight on what would be the best path for you in your situation. Thank you so much for watching. If you're watching on YouTube and you thought that this was valuable, you're like, wow, now I get it, would you please give us a thumbs up and subscribe to our channel? This is just the first part in an entire series we're going to do on RMDs. It's a big topic with a lot of nuances, and we're coming at you over the next few weeks with several other videos to help you clarify and take advantage of the RMD rules for your situation. If you have a question, like if you're like, gosh, I'm still confused about this, maybe I need to ask a question, please do so in the comments. I will respond to your questions and comments. Chances are, if you have a question or you still need further clarification, you're not the only one, and other people can benefit from your questions and comments as well. So thanks again for watching, and please subscribe to our channel to get all the latest on our future videos. Actually, I'm gonna do that one again. Okay, I'm gonna start over. Okay.